that has the opportunity to revive the economy of Ghana, then it is the banking and finance sector. And in this era of COVID-19, the Business and Financial Times has put together thought-provoking industry players to have a conversation about how to boost the economy and also bring the economy back to life during and post-COVID-19. The theme for today's occasion is bringing the economy back to life, the role of banking and finance. The speakers are going to be Mrs. Elsie Awadi. She is the second Deputy Governor of the Bank of Ghana. We also have Daniel Addo. He is the CEO of Consolidated Bank Ghana. We have Mr. John Ewa. He is the Deputy CEO of the Ghana Association of Bankers. We have Dr. Richmond Etuahene. He is the CEO of Salmon and Partners. We have David Kojo Owusu. He is the Country Managing Partner of Deloitte Ghana. And we have Dr. Benjamin Amwa. He is a lecturer of the University of Ghana Business School. He's going to be our moderator for today's event. And we have Mr. Alex Metcalf. He's from ACCA from the United Kingdom. This event will be streamed live on all our social media platforms. On Facebook, we are the Business and Financial Times. On Instagram, we are at BFT Ghana. On Twitter, we are at BFT Ghana. We have some sponsors, we have some partners actually that we want to acknowledge, and they are Mazars, we have Bank of Ghana, Bank of Africa, we have Puma Energy, we have ACCA, we have Global Media Alliance, we have ETV Ghana, and we have Asase Radio. Don't forget to like all our social media pages, follow us on all our social media pages, and also you can subscribe to the digital version of our newspaper by simply visiting our website www.thebftonline.com and click on the subscription button, and an attendant will get back to you shortly. My name is Nicole Babauti. Please stay with us. We'll be right back.
Thank you very much for this opportunity. Good morning, Ghana. Good morning to you all. We are coming to you from Gold Coast Kimpeski Hotel. And this morning we have a wonderful discussion that we are all going to enjoy, even as we attempt to understand how we can all bring the economy back to life from the ravaging effect of COVID-19 and what it means for our finances and for our banking sector in particular. My name is Benjamin Amwa, as I was already introduced, and I welcome you all to this morning's educative and informative and policy-oriented business program brought to you by Business and Financial Times, the leading financial newspaper in Ghana. We'll be having two of our guests getting to us on the phones, and then we'll have three of our guests in-house who will help us to navigate the waters of COVID-19 and its effect on the banking sector and on our finances in general. Like they have been introduced, I have to my immediate left Mr. John Ewa, who happens to be the Deputy CEO of Ghana Association of Bankers. John Ewa, can you give us a wave? Thank you very much, John Ewa. Then next to him, I have here the CEO of Consolidated Bank Ghana, Mr. Daniel Addo. Mr. Daniel Addo, can you give us a hand? Thank you. So we are ready and set to roll. From October, the world was made aware of what looks like China's problem and not our problem. Then through October, through November and December, the World Health Organization declared coronavirus a global pandemic. As we speak now, from the WHO's dashboard, over 60 million individuals have been confirmed to have contracted the COVID-19 virus, with over 600,000 deaths and counting. This was a health risk that has transitioned to become an economic risk facing all countries in the world. And as we think about policy direction and how best we can bring our economies back to life, Business and Financial Times has made it possible for us to have the actors of the economy who matters. And this morning they are here to help us understand and to appreciate what policy can do to help the industry, to help our well-being as a whole. So you are welcome. My first question is to Mr. Daniel Addo. Can you please tell us how COVID-19 has impacted your bank, Consolidated Bank?
Thank you very much, Dr. Amoah. Let me begin by saying that I'm very delighted to be here this morning to discuss this very all-important topic. As you said in your intro, COVID-19 has put a lot of stress on health systems, has put a lot of stress on global supply chains and the financial systems across the world. In the same vein, we, Ghana, have felt these pressures, and we felt the need to begin to manage the effects of this pandemic. For us in CBG, and I like to talk about CBG, but also talk about the banking industry in general because we are a key part of it. I like to take it from three parts, and I'll talk about the effect on people and work systems. I'll talk about the effect on technology, and I'll talk about the effect on business in general. So one of the key effects of this pandemic is the slowdown it has led to business consumer demand, and that is beginning to feed through the financial system. So consumer demand slowdown has led to slowdown in imports, slowdown in FX business. Banks have had to adjust their pricing so as to react to directions, one from the central bank, and also to be able to meet the needs of our customers. Banks have seen some deterioration, albeit at a very slow pace in asset quality, and so these effects are beginning to feed through the banking system. We've reacted in different ways to it, and I'll come to that. But on the other hand, you've also seen different ways of working. We've had to be very innovative. We've had to quickly put our BCP, our systems in a place so that we're able to work well and we're able to serve our customers with a reduced number of staff. Because obviously, as we do have to maintain social distancing in our offices, we are unable to have a full complement of staff in the office at all points in time. So for us, for instance, we've established a dual track system where for roles that do not have to operate from the office or are not customers facing, you work 1 week on, 1 week off. So those are the innovative ways we've gone around managing the possible effects of this pandemic on the workforce. On the technology side, banks have had to quickly scale up their technology because a lot of staff are working from home, and what happens then is that you need to give them connectivity into the office. You need to also give them communication. And so you see that you quickly scale up your enterprise IT systems so as to be able to cope with the increased traffic. By effect of that is the need also to ensure that your technology platforms are very secure. Cyber risk has become very elevated because of the fact that we're all working away from the office most of the time. Now, on the financial side, yes, we're seeing a dip in numbers when compared year on year because of the slowdown in transaction volumes, and because banks have also, and not only banks, but businesses have decided, have had a look at it and said, okay, we don't know how this is going to play up. So from March coming into Q2, Q3, you're seeing a slowdown in expenses. You're seeing banks saying, let us conserve capital, let us manage our risk until we have clarity on the way forward. So overall, all these impacts will feed through the financial system, but it's the wrong kind of impacts you want, because at this stage you want to be able to push consumer demand so as to be able to grow the economy. So in a nutshell, that's the effect on the system.
Thank you very much for your response. Mr. Ihua, what has been some of the concerns that have been raised by members of your association from the COVID pandemic in terms of the operations?
Thank you very much, Dr. Amoah. It's a privilege to be here, and I thank BNFT for inviting the association to be part of this. Yeah, we know that this pandemic has demonstrated one thing. It's not only disrupted our health systems, It's almost destroyed the global supply system. And as banks, of course, we rely a lot on the health of our customers. When I say the health of our customers, we are talking about the health of our customers' business and the individuals that work for them who ultimately are bank customers as well. But they say you cannot build a reputation on what you are about to do. Reputation is built on what you have done. So I would like to give a little bit of background as to what banks have done, during the pendency of this epidemic. As soon as we got into the heat of it, when the World Health Organization declared it a world epidemic, banks came together and said, this is not the time to work in silos or as individual banks, but to have a united front and have an industry view of what is going on and how, as a financial industry, we are supposed to react so that we do not dissipate our energies in focusing on little things here and there, but then we can impactfully also undertake certain activities. So as soon as those meetings were held, banks agreed to set up what we called, at the time, COVID Relief Fund, which was a fund contributed to by all the banks, a total of 10 million Ghana cedis. And why did we do that? Because we realized that, yes, in the heat of this pandemic, it was not only affecting the health of people, it was affecting how the efficiency of institutions that were tasked to handle the virus or the epidemic. We're talking about the research institutions, medical facilities, and the like. And also, we deal with human beings. As banks, we exist in societies. And therefore, we also observe that there were, when issues of this nature happens, they say the vulnerable people in society become even more vulnerable. So the fund was set up so that during this partial lockdown, which happened towards the latter part of March, the association decided to feed some people, homeless people, people in deprived communities. We provided hot meals on a daily basis and spent about 300,000 doing that out of the 2 million. The private sector fund, which also undertook this bold decision to set up a disease, what do you call the infectious disease center for isolation and prevention of infectious diseases at the Ghana East Municipal Assembly or Ghana East Hospital. The association contributed 2 million to that fund to help in the construction of a 100-bed isolation center. We gave Noguchi about $380,000 towards the procurement of test kits and provided hand washing basins to tertiary institutions, regional hospitals, district hospitals across the country. So as banks, we were not just focused on how do we save our bank, but we were also focused on how do we ensure that the social order is not deteriorated and that as a society we are able to function as expected. Let's put that aside. We also know that towards the end of March, the governor, our regulator, Governor of Bank of Ghana, came out with some regulatory measures to help smoothing the environment a bit and to ensure that banks will have some backbone in our ability to intermediate in the economy and help the flow of financial resources during the pandemic. So 3 key actions that were taken by the Bank of Ghana that resulted in the banks and armed the banks with some ammunition to be able to do the things that we did was the reduction in the policy rate to 14.5%, a reduction in the capital conservation buffer from 3% to 1.5%, and the reduction in the cash reserve requirements from 10% to 8%. As a result of these measures and the measures that banks on their own also took, between March and June, lending rates from the commercial banks reduced from by up to 350 basis points across board. Banks, in the heat of COVID, one would expect that the credit stance of banks would be hold. But we said, no, we have to continue oiling the economy. And therefore, between March and June, and towards the end of June, banks had pumped over 3 billion Ghana cedis in fresh money in terms of exposure, new exposures to the economy. Secondly, of course, operations of businesses have been affected. Their cash flows, based on which banks had provided money, had been depressed and were struggling. And therefore, we saw snippets of distress in the asset quality. These customers, on case-by-case basis, approached banks, and as an association, we took a decision as and when these discussions come on board, banks should positively review them and take decisions. So, as a result of that, a total facility of about 3.2 billion has been restructured. And this is not the global facility amount. I'm talking about payments that should have come in during the pendency of the COVID, which banks have on their own allowed to be reprofiled, extended, or given payment holidays to customers. Again, as a result of the reduction of interest rates by up to 350 basis points, banks have put in total about 102 million cedis into the pockets of their customers. So these and other things are interventions that banks on their own have also undertaken. Even for legacy lines that were available, the most, I would say, sensible thing during crisis and uncertainty is for banks to say, we are holding on to further credit, but they allowed customers who had legitimate need for liquidity to draw down on lines that had already been approved and conditions had been met. So on the whole, the industry has responded positively, and therefore we know that, of course, as the events unfold, banks will have to recalibrate their response, and we are all, as is happening worldwide, continuously reviewing and monitoring the situation, and banks will respond, and the industry will respond appropriately.
Thank you very much. You are watching us. We are coming to you live from King Petsky Hotel, and it is Ghana's most respected CEO Business Breakfast series. My next question is to Mr. Ado. Your 2019 report has been very good. The numbers speaks volume of what you and your team have done so far as Consolidated Bank. But then banking business thrives on bank-customer relationship going forward. With the effect of COVID, what has been some of the changes that you have implemented at your bank to have good customer relationships? Thank you.
Thank you very much, Dr. Amoah. And you're totally right. The banking is really a customer business. The bank is only as good as the relationship it maintains with its customers. Now, COVID-19 had the potential to upset that relationship. But on the whole, banks have reacted very well to this also. And it's all with the power of technology. COVID-19 clearly then put us in a situation where we couldn't manage face-to-face contacts with our customers the way we used to do. And so for most banks, and CBG included, what we did is to beef up our contact centers, to deploy technology solutions that allow our staff to interact as much as required with the customers. Take your contact center staff through a process where they are able to understand your products, your services, so they are able to deal very well as a first point of contact with your customers. Also, still using the power of technology and power of social media, you're able to communicate as much as possible with your customers, send them updates on products, send them updates on COVID-19 status. And so, yes, one would have thought that given the effects of COVID-19, customer relationship management will be an issue, but it hasn't been that much. We're still very much in touch with our customers. We're still able to communicate a lot with them. And indeed, perhaps going forward, like as they keep saying, this is a new normal. Perhaps that's a new way to interact with the customers. But most importantly also, it's allowed us to show empathy for our customers a lot. It's allowed the banks also to take on the role of, if you like, educator by consistently pushing out advice and information on COVID-19, the health protocols that need to be observed, and you'd find that we're using our platforms a lot for that. All our social media platforms are devoted to pushing this advice out there. So yes, that possibly is the good side of COVID-19, if I can put it that way. First of all, it's allowed banks to sit back and look at the installed technology infrastructures and begin to leverage them to the best advantage of the banks themselves and their customers too.
Thank you very much. Again, as part of the arrangement, the management and the organizers of this program have made sure that we are well spaced out here. We have our sanitizers, nose masks, and the whole place has been set up in such a way that COVID-19 health protocols are being observed. Thank you. From information that we've had, right from the Minister of Finance through the Bank of Ghana, the SME subsector has been seen to be the sector that is suffering the most from this pandemic. From the association's point of view, what has been some of the interventions that your members are providing for struggling SMEs so they successfully overcome this challenge in their business at this period of time?
Okay, thank you very much. First, I would like to tackle it from the angle of the concerns that industry has regarding what the potential outcome of the scenarios we have now will play out. Banks are concerned as to how long this situation will go on. The health experts are unable to tell us that COVID-19 will be over by, let's say, by end of quarter 4, quarter 3, by end of January. We are not sure. So whatever intervention or whatever assistance that the industry is putting in place or planning to put in place is being impacted by what potentially could be the life of the epidemic. Secondly, we are also concerned about the potential asset quality, impact on asset quality. Of course, deterioration in assets don't happen overnight, and the transmission can take quite a bit of time, and therefore, much as we have not seen aggressive decline in asset quality, the industry is worried as to what the potential impact will be down the line on our impairment assessment and the like. Having said that, we also take cognizance of the fact that we are a key sector in any kind of recovery program that this country undertakes to get back on track and into economic progress. And banks take that responsibility very seriously, because it is only when the pie is big that any piece of it that you take is sufficient or good enough for you as a market participant. So we are interested in credit expansion and making sure that we continue building on an enlarged pie, and all of us can participate or take part in a bigger share or share of a bigger pie. But specifically to SMEs, the industry is in active discussions with the government. We've had several meetings with the Minister of Finance and his team, trying to understand exactly what the government program is in terms of support to the SME sector, and in fact, to the entire economy, the economic resuscitation program. And what we have said in all those meetings is, yes, it is good in times of crisis and uncertainty to have robust and bold plans, but given that those plans have got to be funded, the plans have to also be made bankable, so that in the interest of banks will be whipped up, and we can convert our interest into proper actions and sanction the required loans to the SME sector as appropriate. So those discussions are ongoing, and I'm happy to report that as an industry, we've even in the final stages of sending the proposal on how best we believe SME financing should be handled. It's a proposal that, as a banking industry, will be sending to the Ministry of Finance for consideration and review. That said, on an ongoing basis, in routine businesses, as in routine business conduct, as I said, banks have not closed the taps. What we are doing is we are lending with our eyes very wide open, but we are not saying no because of COVID. Banks are doing business as usual, and projects that are coming to the credit table that are bankable, banks have put money behind them. And I talked about new loans that have been sanctioned and approved and disbursed during the pendency of COVID. It takes two to tango. So it is not all a responsibility on the banks. It's also a responsibility on the customer side, on the SMEs themselves. What COVID-19 has taught everyone is self-sufficiency is the best way to go. Nobody knew that Ghanaians were that good at the manufacturing of face masks, hand sanitizers and the like have all now been localized, and we are getting a lot of local artisans, local manufacturers engaged in the manufacture of these things that hitherto would have imported. To what extent is the SME population able and willing to take advantage of the other side, which is the benefits associated with this coronavirus, the other side of it, which is the potentials associated and opportunities associated. Once they are able to extract these opportunities and it's clear about where the market is and how they are going to work on their supply chain to the market and get liquidity back into the cycle, banks are willing and ready, ever ready to support agenda such as those, people who are willing to take advantage of the opportunities presented by COVID. You've seen in the newspapers publications about banks that have already assisted manufacturing concerns that have shifted their focus from their routine supply lines into manufacturing of items that are relevant for the current settings that we find ourselves in, like hand sanitizer. There are companies that have shifted or dedicated some manufacturing lines to the manufacture of hand sanitizers. We have small enterprises that have left tailoring of dresses or dressmaking into the making of face masks and the like. So to what extent is the SME grouping or population willing to take the bull by the horn and say, these are things we used to import. Now, the ports are not as efficient as they used to be. And if we have the capacity locally to engage in the procurement and installation and manufacture of these items that hitherto were importing, but financial institutions are ever ready, and we stand ready to assist companies that approach the banks to discuss projects such as those. It is only by that approach that the economic recovery process will be fast-tracked. It cannot be banks only just going out and saying, we'll do this, but customers also approaching banks and making tangible proposals that are bankable for banks to put money behind them.
Thank you very much. We are glad to hear that the association and its members are prepared to support. It is up to SMEs to take advantage of some of these opportunities to revamp their businesses and to get on track even as we attempt to fight COVID from the economic front. In addition to what you've said, what are some of the concerns that you still like the regulator to see to? The regulator has done a lot, reducing policy rates, cash reserves, etc. But then, if there are any additional concerns that you think the regulator must still come in, since you are on the ground doing the business?
We thank the regulator for the initial measures that were introduced, but I'm sure, as the governor said, they are continuously reviewing the environment, and they will come in at the time when they believe that further regulatory measures will be important to get the wheel of the economy grinding properly. From the bankers' perspective, we work with certainty, and we want a situation where, when measures are introduced, they are, should I say, clearly stated, so we know the boundaries of those measures. As we speak, we are in discussions with Bank of Ghana about how best to establish some guidelines around the initial measures that were introduced. A case in point is the reduction in the cash reserve requirement. Industry wants to know how long is this going to be, so that if we take a decision based on the reduction in cash reserve requirement from 10% to 8%, it gives us excess liquidity. If we pump that excess liquidity into, say, a 3-year facility, and in 2 years' time, things stabilize and those measures are reversed, what happens to those facilities that have been locked up in the long term, which goes beyond that period? So those are some of the things, the guidelines that we are working with the regulator to streamline. And I'm happy to say that discussions have been very fruitful, and we hope that in due course we will have some strict guidelines to go with the measures that have already been introduced. And if in future fresh measures are coming, they come with strict guidelines so that as banking practitioners, we know exactly what the boundaries or the bounds of our operations can be from those kind of measures.
Mr. Donaldo, any additional point you want us to know on this?
No, I will tend to agree with what John has said. Certainty is what is key. And when we have certainty, we are able to plan forward and able to execute the projects that we intend to execute. So certainty is the key thing that we need here.
Okay, thank you. We'll now go online and then speak with Mr. Kojo Owusu, who is the managing partner of Deloitte. So, Mr. Owusu, if you can hear me, we would like to know from the assurance point of view, what assurance you can give from your engagement with banks during this period. What general assurance points you want us to know from the banking point of view? Thank you.
Okay, thank you. And first of all, let me acknowledge the panelists in the studio, Dan and John. I'm supposed to be with you, but I can still join you by the power of technology. So, good morning. So in terms of what has happened, and I've followed the discussions so far, from what is going on so far, I think as banks, the key thing that is important now is survival. Now, we need to look at ourselves and say, these are the things that we need to do to survive. So I've broken it down into 3 key parts. So in terms of survival, in terms of liquidity requirement, in terms of risk management, and you can put profitability as one of the things that is on the bottom. Because now what we need, and as John alluded to, there are a lot of things that are happening in terms of the asset quality, what is happening around that. We are still not yet aware of how the whole impact is going to be. So what I'm saying is that we need to look at it in terms of how do we prepare our banks to survive? How do we look at our operations to ensure that we are streamlining our operations to ensure that we survive? Now, when you talk about in terms of assurance, what does assurance mean? Assurance comes with controls. Assurance comes with risk. Assurance comes with operational efficiencies. Now, we need to ensure that we are looking at each of these aspects of our business, and we are ensuring that whichever decision that we take, the decision that we take is ensuring that our banks and our financial institutions will be able to survive this pandemic, and then we'll be able to deal with what is even ahead of us. So that is what I will say for now. And as I get a chance, I can elaborate more on some of the things that the banks are required to do to survive. Thank you.
Thank you. Please don't go. My next question is, the story has been all gloomy, not so good, you know. That is what you have been hearing. But then, what are some of the opportunities within this picture that has been painted to us that banks can ride on to be successful?
Okay, thank you. So again, in terms of what is going on, there are enormous opportunities that is also being created. Now you will see that there is increased use of technology in the banking space. Now people are doing a lot more transactions on by the internet. And so banks needs to be a lot more innovative to see if this is the direction that we are going. And Dan talked about the new normal. If this is the way we are going to go, and I can tell you that we are going to be at this point, maybe for now and into the future, some of the opportunities has to do with the savings that will have to be derived. Some of these savings will have to be contained. For example, we need to begin to look at whether, even in terms of the space that we occupy as a bank, we will need more. Can we improve that with technology? We need to look at it. Can we deploy our people to do things differently? We need to look at the support that we are getting from the government. What else can we get from the government in terms of support? And we talk about the excess liquidity that the government is allowing these banks to use. Where do we deploy these resources? So I'm saying that there are a lot and enormous opportunities in terms of the use of technology and increased transactions in the system, that banks will have to be innovative and try to, because don't forget there's going to be reduction in a spread. Interest income is going to be reducing. Fees and commission incomes are going to be going down. So banks are going to have to find innovative ways by which they can increase their revenue through the medium through which their customers are interacting with them. Thank you.
So what are some of the risky areas that banks will have to concentrate on so they don't overly expose themselves in their quest to turn out good results?
Okay, so and thank you. There are a number of areas that banks will have to watch out, and I think John talked about the fact that as a bank, they are not looking to stop giving credit, which is good, but we need to begin to look at it in terms of giving credit. What areas do we want to specialize in our credit administration? So one of the risks that we're talking about is the risk relating to credit. In fact, we also have to look at, in terms of liquidity, how do we ensure that we are always going to have enough liquidity in our banks to be able to operate? We need to ensure that we are also managing our operational risk. In terms of our operational risk, even as we go back, are we okay with cyber security? And John already talked about the fact, because once there's increased activity on the internet, we need to ensure that we have systems and we have processes to counter these unscrupulous people who want to take advantage of this and defraud customers on the web. So there are a number of risks, and I can categorize them into liquidity. You can look at them into credit risk. You can look at them into operational risk. And if you want to break this operational risk, there are a number of things that we are supposed to do from that side. And so these are the critical things. Like I said before, as banks, we need to ensure that every decision that we are taking is a decision that will lead to survival of the business. And I like it that from the discussion, the thinking is not to curtail the business. The thinking is not to embark on mass sacking of employees. We need to be innovative and we need to look at it. How best can we use our people? How best can we deploy our people? How best can we ensure that we'll get people to do other things within the business so that we make good use of them? Are we engaging our customers? Are we engaging our creditors? Are we engaging our contractors? Are we engaging our service providers? We need to be looking at each of these operations and ensure that are there any efficiencies that we can derive from these? And that comes under operational risk. And I think as bank, we need to take a good look at all of these aspects of operations so that any benefit from these reviews can be derived to the banks, because we do not know how long COVID is going to be with us.
Thank you. Viewers, we'll pause here and take a short break. We'll join you soon. Thank you.
Okay, your car dey beep out. Charlie, me if I get some little supporter, like I could sell this one then top up for a new car.
Oh bro, why don't you do as I do? Bank of Africa, my closest partner, sorted me out with a personal loan, and they can sort you out too, so you can change this your car.
Hey, see, right now, dear, life is good for you, pal. You have been able to expand your business, which means more money for you. Hey, madam, no.
Oh yeah, it's not been easy, but with hard work and SME loan support from Bank of Africa, my business and my life is better. Just do as I do and bank with them.
With presence in Ghana and across the continent, Bank of Africa is changing lives of individuals and businesses. We are a strong group of professionals and a partner you can rely on. Bank with us now and feel the difference. Bank of Africa, as strong as a group, as close as a partner. Okay, your car dey beep out. Charlie, me if I get some little supporter, like I could sell this one then top up for a new car.
Oh bro, why don't you do as I do? Bank of Africa, my closest partner, sorted me out with a personal loan, and they can sort you out too, so you can change this your car.
Hey, see, right now, dear, life is good for you, pal. You have been able to expand your business, which means more money for you. Hey, madam, no.
Oh yeah, it's not been easy, but with hard work and SME loan support from Bank of Africa, my business and my life is better. Just do as I do and bank with them.
With presence in Ghana and across the continent, Bank of Africa is changing lives of individuals and businesses. We are a strong group of professionals and a partner you can rely on. Bank with us now and feel the difference. Bank of Africa, as strong as a group, as close as a partner.
Welcome back to Ghana's most respected CEO Business Breakfast Series, brought to you by Business and Financial Times. Our discussion so far has been interesting. We know that there is hope for our finances and the economy even after COVID-19. Mr. Daniel Addo, can you bring us to speed as to what has been the success story so far for CBG?
Thank you very much, Dr. Amoah, and I'm actually delighted to have this opportunity to elaborate a bit on CBG. You're all aware of how CBG was formed in August 2018, and so far I'd say that the principal reasons for which we were established have largely been fulfilled. Recall that there was pressure on depositors' funds at the time when 5 banks were licenses were withdrawn, and so clearly depositors' funds were at risk at the time, and our primary objective at that time was to stabilize that and to ensure that those depositors' funds are protected. And that was largely done over the period. We've paid in excess of 4 billion cedis to depositors who had funds at the time with those institutions. And then going forward, the objective is to set up a truly strong Guinean bank with a focus on local corporates and SMEs. So our forward-looking strategy is geared at that, and I'm actually delighted that John mentioned the SMEs and the need for us as an economy to focus and begin to fund SMEs. And so we have done quite a bit in that space, and we're also gearing up to scale up in that space. We have a plethora of products for SMEs, which we've already deployed and are being patronized by our SME customers. These products range across lending products, they range from payments and collections products. If you go into the markets, we're probably the biggest collector of funds in the markets because we're out there in the markets. We have teams out there that do these collections. We're actively lending to small traders. We are actively lending to small businesses. We're helping businesses to bridge the value chain between big corporates and themselves, deploying products that are key to the way those businesses run. Over the next few years, a couple of years, we're also looking very strongly at a digital-facing bank. And I say this, and let me explain. Clearly, this COVID-19 has shown us the power of technology and the way one can use technology to reduce your cost to serve, and from even a risk management or a credit lending point of view, to reduce the time to yes. What you find is that for plenty of banks, Ghana, Africa, the time to take a credit decision can be long. And it's not because of it's because of the institutional frameworks around which we operate, right? But the power of technology, using alternative credit scoring methods, makes this easier, makes the credit decision process easier. At CBG, we are working working at a situation where you're beginning to lend into that SME sector using alternative credit scoring models. So that is our focus going forward, SME, business, digital transformation, and we're excited at the possibilities ahead. So if you ask me, how have we been successful? We've been successful because we're focused on the core of what we are set up to do. We've put together a team that is very committed and dedicated, and that has a clear objective and focus. We've put in place a strong monitoring system and processes around the business so that we're operating as a lean but very efficient organization. And that's been the key to our success.
Thank you. You heard from the CEO of Consolidated Bank and their success story so far. And from what he said, going forward, there'll be more success to be chalked, and they are working on it to make sure that what they were set out to achieve, they achieve it, and they achieve it perfectly. I'll go online for another video call and to speak to Mr. Alex McAlfee, Head of Public Policy, ACC Global. Alex, if you can hear me, I would like you to give us your view, the global perspective on how banks are responding to COVID-19 and their effort to help businesses to survive this difficult time.
Excellent. Thank you very much for providing this time, Benjamin, to speak with all of you this morning, and good morning, everyone. I wanted to actually very quickly intervene just to say as well, my role within ACCA is one of Head of Public Sector Policy. So from that perspective, what I can bring to you today isn't as much the world of banking and the global perspective there. We have other experts that can speak to that. What I'd like to very quickly offer to you instead this morning is an intervention around the government response and the interrelationship that we have between the banking sector and government finance as well, if that's of help to yourself and the panelists. And really, there's one core message that I'd like to share with everyone today here, and this is on the back of a research report that ACCA, in collaboration with the World Bank and the International Federation of Accountants, has issued just last week, looking at sustainable public finances in government. And what we've seen within this, with some really excellent analysis back from the International Monetary Fund, is that there has been $9 trillion of intervention around the world following this first phase of COVID-19. But there's a really interesting feature of this, which is that traditionally most of the interventions have been more revenue or expenditure measures supporting healthcare systems, immediate responses or cash transfers. But instead, what we're seeing today is a majority of these interventions that are what are described as below the line. So things like loan guarantees, often operated through banks in providing these. And the real challenge and call to action that I have to everyone today is that for governments, many of which are operating still on a cash basis, they're not going to have the awareness of the impact of these types of below the line interventions, like loan guarantees, like equity injections. And across this $9 trillion intervention, including actually having looked at some of the interventions in Ghana with the coronavirus alleviation program, this does include guarantees and first loss instruments. So there's, I think, a really important synergy and relationship to be developed here for public sector finance professionals who need to have a more holistic view. And our argument that we make globally and that we've put out in a joint press release with the World Bank in talking about this is that what we actually need to do now is move away from traditional metrics of economic health and look to what's called public sector net worth instead. Use the balance sheet to understand the position of finance professionals, to understand the position of the public sector as well. And to do that, we're going to have to drop debt to GDP ratios as our key metric and instead look to the balance sheet. And I think there's a really important role for the banking community in kind of having this conversation as well, in supporting public finance professionals as they move to this balance sheet approach, where that is something you'll be much more comfortable with. And there is going to have to be a joined up effort in the response as we try to understand this next wave as we move towards recovery. So I hope that's a helpful intervention for you, Benjamin, but I'll hand back over to you and colleagues in Ghana. Thank you very much for your time.
Thank you. Don't go, please. I would like to bring you back to the issue of the interventions and to come for the point that in many instances, government interventions and stimulus packages have been wasted, especially in a panic situation like this, where these expenditures were not planned, but then government had to be called on to respond, to salvage the situation. What are some of the areas that we need to be looking out for so that it doesn't become an avenue to just dissipate public resources, but then the desired impact can be achieved, even as governments attempt to help resuscitate the economies? Thank you.
Excellent. Thank you very much for the question, Benjamin. I think that this was excellently described in a recent piece of research from the IMF, where they talk about how interventions need to be rapid. And in this situation, it's of course the case that we won't have the same kind of controls that might be expected before COVID. But I think the excellent summary statement in how we try to deal with this is you need to move quickly and you need to keep receipts. And if you take that approach, moving quickly and keeping receipts, you'll actually be in a position where even if after the fact, we try to take stock and say what has happened as we responded to this crisis, you'll be in a position you can at least apply a degree of accountability and transparency, still work with Supreme Audit institutions and the Auditor Generals to make sure that you do have unqualified accounts that are coming through on the other side of the year. But at the same time, we do have to acknowledge that there's going to be a need to move quickly and to rely on the judgment of finance professionals and public policy professionals in government, working in concert with the banking community and with the broader public sector to try to respond to this. I hope this is something that we really do see as a critical role for finance professionals around the world in trying to manage this transition to recovery as well as we work towards building back better.
Thank you very much, Alex. Okay, from what Alex said, thank you. From what Alex said, I would like to come back to you from the industry perspective and especially from the bank perspective. You know, government stimulus package is coming, and the banks will play a key role in helping government to disburse these sums. These are, in most cases, seen as government money. And so sometimes the seriousness and the commitment to manage the after effect in terms of repayment so that these resources will not go waste are sometimes not managed very well. What are you doing as an association? And then to Mr. Danlado, what is CBG's approach so that these resources, when they are channeled through your banks, can be collected, and then we can have the rippling effect that we expect it to have in the economy. Thank you.
Yeah, I think it's a very good question over there. And you're right about potential pitfalls along the way if the disbursement of this kind of public money or public funds are not handled in the best possible way. We run the risk of throwing money away in the heat of a pandemic when money is badly needed. From association perspective, we see it more from policy directives or policy direction that government has a duty to ensure that these funds are properly targeted and they are not made wholesale funds and available to any hook and cranny who comes making demands that have gone through these challenges and therefore have these needs. And that is why a very strong partnership with financial institutions, I mean banks, to help with the assessment of the qualifying criteria of these potential beneficiaries of such funds, so the funds will go to address the ills or problems in the economy that they are supposed to help address. If we make it one of those funds that we've had in history where people just make themselves available and they become vehicles for the, just transition of or transfer of funds into avenues that were not intended in the fund setup, then it will be an unfortunate and a lost opportunity for the country. One thing that is certain from this COVID is, as unfortunate as it is, we must come out stronger, and it must also change the way we do some of the things. And one of those things is what you've just talked about, the use of public funds. And much as the desire and the intention is very good, if it is well targeted and the pre-qualification and qualifying criteria for beneficiaries is streamlined and well grounded, then we run on the back of a strong assessment program, and therefore we have a high likelihood that the program will be successful at the end of the day. Quoting the finance minister, or paraphrasing him, he said they want businesses to keep their employees and also to keep the economy going. So the funds have to go into creating value, so that the value that is created will return funds into the cycle and will have money back in the pockets of employees who will then pay their taxes, engage in expenditures in the economy, and keep the economy functioning as a proper economy, so-called. So just not to belabor that point, but it is critical that the partnership of the participating financial institutions is broadened and made more robust. And if you ask for my personal view, even to be championed by the banks and say, okay, we've given this, but we need you to engage in strict assessment. Yes, we are in a hurry. We cannot just go and bring this, go and bring that, but we need, in our haste to fast track the disbursement, also to be set or to be sure that we do not, just dissipate the funds and make sure that people who qualify are the real people who are going to use it towards production and who are going to use it to create the employment or maintain the employment that we so badly need at this time.
Thank you. We are in a hurry, but we must still have our eyes on the ball so that we don't get ourselves into messy situations. Mr. Danilado, any additions?
Yeah, sure. I think my previous colleagues have said clearly, you need to have a framework around which you do this policy intervention. It's very critical that from the get-go you define that framework, you have clarity on what the expected outcomes are, so you're able to measure post the event. For us at CBG, what we have done is to set together a dedicated team to handle the various interventions that have come up now. And so that team has their own operating process. They have the systems set up. They have a monitoring team, and it's very, very important that even as you do this, as John said, we are going to have to act very fast. But when you do that also, it's very easy to give a loan, right? But the key work is how you monitor to ensure that that loan, that money comes back. And so we set up a team that takes it from origination to disbursement, to monitoring, to ensure that we are with the government on this. Clearly, and the structures that I've seen also seek to put some part of the credit risk on banks, which then makes it very clear that our capital is also at risk, and therefore there's no tendency to say that this is government money, so we're not treating it the same way we treat our capital. So when you have those elements in place, and I believe you do have the pillars for successfully managing a policy intervention of this kind. The truth is that we as banks are very important transmission mechanisms for all these COVID alleviation schemes, and so even as we do them, we're very aware of our wider responsibility to society, and we take that very seriously at CBG, and I'm sure the entire banking industry does too.
Thank you, Mr. Daniel Addo. So, I'm a customer of a bank, and I want a facility. In the midst of all these difficulties in terms of liquidity from businesses not thriving, and for that matter, having difficulties in depositing funds, will I be successful in accessing a credit facility if I should walk into your bank or any of your member associations for a facility?
That's a tough question. The point is, it is not a matter of whether you want a facility and therefore you walk into a bank and the bank should be willing to give the facility. I don't think it's as simple as that. There must be a need. There must be a reason why that facility is needed. And that facility, because when banks give money, as Dan rightly said, it is depositors' money. And our prerogative or our interest, key interest, is to ensure that as money leaves, money comes back. So that when deposits make demand for their money, banks are able to also return their funds to them. So it is more to do with what use are you going to put the money to? Has it been properly defined? Do you have an existing operation? Is it a working capital expansion requirement? Are you procuring capital equipment? Are you paying settling some bills? So it is more focused on the use of funds and where the repayment is going to come from once those funds have been used. So if these are properly defined, you have the right market, use of funds is clear, and the repayment source is guaranteed or clear, banks do not lend because you have collateral. Banks lend because they believe in the project you are going to execute and that they believe that that project will pay for the facility. Collateral is just taken as we call it second way out, just for comfort. But the rationale for lending is grounded in the use of funds, and aside the use of funds, who is coming for the money? What is the credibility of this party that is making the request for this fund? So it is both ways. You, the client, making the request for the money, you must properly define what you are about to do. But as I said earlier on, banks have not taken a credit stance of hold. They've taken a credit stance of, we are willing to help with credit expansion during this period, but we are willing also to ensure that we do not unnecessarily dissipate depositors' money. So risk frameworks have been, should I say, recalibrated to factor in COVID-19 considerations, to factor in the current economic order, the market circumstance. And once all those things, those boxes are ticked, then there is no reason why, if you have good use and good program, the bank will not put money behind you.
Thank you. I have still on the line Mr. Kojo Owusu. Mr. Kojo Owusu, we were talking about government stimulus package, and then the fear that in this pandemic situation, this may become a channel for these resources to be wasted. From the assurance perspective, what do you think should be done so that at least these resources will be disbursed in a manner that will bring the utmost benefit to the Ghanaian populace?
Thank you. And I think I'm hearing all the things that I want to hear from Dan and John, and I hope that is so. And so in terms of key things that needs to be considered regarding government support and in regard to this, the key thing one is a clear governance around these interventions. So who are responsible? And clearly it's been identified. Give them the funds to the banks and let them disperse these funds. The second point is, what is the objective? What is it meant to achieve? So again, that should be clearly spelled out. What are the policies and the procedures under which you can access these funds? And these things needs to be well articulated, and it's good that the banks that are managing this are carrying a certain amount of the risk. And I will say this, in terms of granting loans, and John mentioned something which is quite interesting, that banks will not give you loans because you have collateral. If that is so, then that is very, very good, and that is very, very positive. Because my view is that in assessing creditworthiness of customers, our focus should be more directed at their ability to pay back the funds, in terms of the ability to raise the cash flows and the businesses that they are putting these funds in, so that they will be able to pay these funds back. So in terms of the whole credit administration, and I break it down into two. One is the asset acquisition, our process of acquiring these assets. That door needs to be very well grounded, such that we do not allow any unscrupulous people to fall into that crack. Now, if even the people are able to fall into it, then we come in. Now there's a use of credit bureaus. We need to put a lot of focus on the businesses that are going to be done. Are these businesses going to generate the cash flows to be able to pay these funds back? And that should be the preoccupation of our banks. And I like what John said, that it is not the collateral that will determine whether you have the funds. But in addition to tightening the asset acquisition process, we need to also have a strong recovery unit. And also we should be able to differentiate our normal monitoring process from our recovery unit. So once a loan or a facility have a problem, that should be taken from the credit administration, and it should go to an independent team whose sole responsibility is to look at the whole process of granting these loans, and then try to ensure that we recover. Now, as a bank and financial institution, if you set a target of recovery such that for the target that you set for your recovery team should be the same amount of provision or impairment amount that made within a particular year, over a period of time, your non-performing loans will be very minimal. So two things that I've said: the asset recovery in terms of the process of granting facilities, whether it's government facilities, whether it's the bank's own facilities, should be watertight. And then the second one is to ensuring that there's independence between the recovery team as well as the normal monitoring team that will be handling this. If we can do this, then I believe that in the end, whatever fund the government will give will go to the intended users, and in the end, the purpose for which these funds are given will be achieved. Thank you.
Social media handles. You can send your questions to our Zoom platform by typing, or as text message, LinkedIn. Our Facebook platforms are available and active. We encourage you to send your questions there, and our resource persons are here and will respond appropriately. Again, to Mr. Owusu, For the past 3 years, the regulator has undertaken some reforms. The results were looking good in terms of the effect of the reforms. Then suddenly we have been confronted with COVID-19. And again, if you look at the measures taken by the regulator, it is more of easing the system so that funds can be made available to sectors that need it. It is good, but then the exposure in taking us back to the very issues that led to the reforms still stares us in the face. So what will be some of your recommendations to the regulator, even as the regulator eases down some of the policy directive to provide liquidity? And again, just opposing it with what our resource person have talked about, in the sense that the banks need to be liquid and they have to have enough cash to help businesses in this period. What should the regulator be doing? We just came from a reform, and then again we have been confronted with this. And this is an indirectly a reform case because we are being forced to change some of the things we committed ourselves to do as a result of the reforms. Thank you.
Okay, thank you. And I think I will take it this way. And I think when we all went to sleep in December, we never imagined that we will wake up in January to be met with anything that is called COVID. And so we are not in normal times. And that is why, if you recall, what I said at the time is that from the beginning, is that some of the actions that we are taking should be actions of survival. We should take actions to ensure that we are all together as one unit. So if you see, some of them will appear that the regulator is loosening up a little bit. But what I want to say is that the regulator should still keep their eye on the ball. So keeping their eye on the ball means that what is the ultimate objective? So you are now looking at long-term, medium to long-term. So some of the easing of transactions, and I like what was said also, that the regulator is monitoring the situation, the performance of the banks in terms of asset quality, in terms of other risks that these banks are faced. So we want the regulator to still keep their eyes on the ball. So far, a lot of intervention has come in, and I will say these are good, and we want to see how these ones are implemented. But we are coming from somewhere that the regulator will have to keep their eyes on the ball to ensure that in the medium term, because the way I'm seeing things is that maybe from next year, things will begin to ease up. But let me say this, that the responsibility cannot be pushed on the regulator and the regulator alone. The banks and the financial institutions will have to take the ultimate responsibilities for their actions. So every decision that we take will have to be grouped into survival, very short-term decisions, medium-term decisions, and long-term decisions. And we need to ensure that compliance is key in the things that we do. We need to ensure that survival is key in what we do. We need to ensure that we are addressing the issue of liquidity, which is very, very key. And we need to ensure that we are being innovative, and we are being innovative, and we are ensuring that the decisions that we take are decisions that will take us into the future. So one, I said already that the regulator should keep their eyes on the ball and ensure that they are guiding, they are watching the space, and coming in to support the banks as and when it's needed. And so far, we can commend Bank of Ghana for the intervention that has been made so far. But I will put the responsibility squarely on our banks to ensure that key decisions that are taken to ensure the survival of those institutions. Thank you.
We are wrapping up, and Mr. Iwa, what is it going to be like for us? Some words of assurance for consumers of banking services and products, even as we go through this period and beyond.
Yeah, I think in periods such as what we are going through, what is more important is confidence. When people have confidence in the economy, they will go about doing their routine activities, they will spend, that expenditure goes through a cycle, and then it will oil the economy as expected. We want people to have that confidence in the economy, that the actors in the economy, the regulator, the banking regulator, the government has also demonstrated that it is keen and interested in ensuring that the wheel of the economy doesn't grind to a halt. As an industry, we've also taken a position that we are key actors in the whole ecosystem when it comes to economic function of an economy. And we take that responsibility very seriously. So as and when bankable projects are put to the table, we will dispassionately discuss and fast-track our intervention, because speed to market at this time is also of essence. But what we will say is, in our attempt to ensure speed, it is not our plan to also override the available controls and the necessary risk parameters that we have introduced in order to meet the need for speed. We know where we are coming from, and the governance issues that we are coming from, and in times such as these, one key area that can suffer is the governance structure of an organization. As an industry, we've taken a view that we will not wait for a third party to come cranking the whip. We will do self-regulation first. So we've taken keen interest in what is happening in the banks, and if you have monitored our activities this year, we've been working very closely with the banks. And in most of the things, we engage in consultative counseling and meetings to agree on what to put out and ensure that there is consistency in our messaging and that we do not appear disjointed to the public, because assurance and confidence is all we need. And people talk about technology and how technology has become so pivotal in this era of COVID-19. And the point I want to add on that is technology. Banks did not just invest in technology when COVID happened. The investment in technology had already been done. What happened during COVID is the pace of adoption, because then people realize they don't have alternative to walk into a branch because there's lockdown. So then the acquisition and the rate was rather accelerated. So banks in the years before, a few years back, had significantly invested in alternate channels for banking. Unfortunately, it had been difficult getting clients to get used to these new systems. But luckily, one good thing about COVID is when you are confronted with of almost no option, then the next option is the available option. And the available option was the digital option. And in order to drive traffic to the digital option, banks either completely waived or significantly reduced charges on those platforms, so that the decision to go there does not or did not have to become a financial decision, but then one that is health-based, and also in order to develop our financial system and an attempt to have digital financial services as has been envisaged in the plans of the country.
Okay. Thank you. Any additions, Mr. Danlado?
Yes, Dr. Amoah, for me, if as a country we are able to come out of this stronger than we were going in, if as an industry we come out of this in a much better position, then at least we would have taken something away out of this pandemic. It wouldn't all have been negative, there'll be positives. And I think that should be the mindset and the outcome we should be looking for going forward. Certainly for us at CBG, our primary consideration will be to build operational resilience so that we're able to withstand any disruptions to business going forward, even if it's a 1 in a million chance. We're able to build a business model that is agile and that is able to ensure stickiness with the customer. So we're able to stand with the customer, as we are wont to say. So there are a lot of lessons to be taken from COVID-19, and I think that as a country, we should all sit down, learn those lessons, and make sure that if and when this happens again, and pandemics do happen, disruptions to business do happen, business cycles do go up and down, but when they do happen, we'll have the institutional frameworks to withstand those pandemics and those disruptions when they happen. Thank you.
Yeah. Amidou Seidu says that majority of the populace save with cooperative society, savings and loans, and they don't have collateral. So these facilities and the stimulus packages that are coming up, how are they going to benefit from such support systems that have been set up? That is from Amidou Seidu. Maybe you can.
No, well, yeah, true. A lot of people save with those cooperatives and credit unions and the like. But you see, in a way, they're not let out of the packages, the COVID alleviation packages that are coming out. The essential thing is to have a business that is able to demonstrate a disruption to it as a result of COVID. And the guidelines are very clearly set out, right? And so once the implementing agency is able to see that business, is able to see the cash flow, is able to establish the fact that COVID has actually impacted your business, then the one box is ticked and you do qualify. I mean, other considerations will come in, but at least that doesn't stop you from being able to access these COVID-related interventions.
Thank you. Mr. Wusu, can you give us your last words as you take leave of us?
Thank you for the opportunity. So I will say to the team and to the bankers, so in times like this, empathy is key. And empathy and getting close to your customers is so important. And so working together and looking after our employees and their concerns, that should be our preoccupation and not our zeal to make profit or to return good returns at this point in time. So that is what I will say. Everybody should put their eyes on the ball, and I'm very sure that soon this COVID will be over and we'll begin to count the opportunities and the benefit that it came along with. Thank you.
Mr. John Ewuah, 1 minute, your last remarks and your points that we need to take home with.
Yeah, thank you very much for the opportunity. As an industry, we want our customers to know that we are there with them. We are also bank customers, and as we've said before, we are willing and to listen. We are prepared. Our doors have been opened. They should also use all the alternative banking channels that banks have made available in these times, so that you protect yourself and you protect the next person to you as well. So we encourage banks to continue with their our customers and the banking population, and actually the entire population, to continue the business as usual, observing all the protocols that have been advised by the Ghana Health Service and the presidency. And if you want to visit any of the bank branches, we've also issued our own guidelines, which is an enhanced guideline, so that bank customers, people who use our banking facilities, and our staff are all safe from the adverse effect of contraction of the virus. We thank you from association, on behalf of the Ghana Association of Bankers. We thank BNFT for inviting us to be part of this program. And we are delighted that it's been revealing and a lot of things have been shared. We are privileged to be part of it, and thank you very much.
Thank you. This is from Albert Kwakupo, Mr. Comment. It says, great webinar and very articulated presentation from all panelists. Under the new normal, banks are working well to meet standards of stakeholders amidst reduced margins. My question is, state banks who are managing the stimulus packages can be very professional in approving the request from applicants while having the objective in mind. We have seen a repetition of constant government pressures on some banks to get their people's request approved. We pray that under the new normal, they will remain firm and resolute. We are in a new era, and I wish them well. Thank you very much. Mr. Daniel Addo, your last comment.
I'd like to say that banks are very poised and ready to play our role in ensuring that we come out of this situation. And so our customers should feel free to walk in. Let's have a discussion. Banks will play an advisory role. For customers that do have challenges with their cash flows, we're ever ready to look at the situation and offer our advice and also do something concrete to manage those situations. Going forward, banks are seriously and quickly looking at transforming our business models so we're able to serve you faster and quicker. And I can say with certainty that next year by this time, at least from a banking industry perspective, things will not be the same. For us at CBG, we will continue to stand with our customers as we've done from day one, and we trust that this collaboration between ourselves, customers, industry will continue and help us all come out of this COVID situation.
Thank you very much. We'll take a round of adverts. I'll be back. Thank you.
Okay, your car the beep out. Charlie, miss if I get some little supporter like I could sell this one then top up for a new car.
Oh bro, why don't you do as I do? Bank of Africa, my closest partner, sorted me out with a personal loan, and they can sort you out too, so you can change this your car.
Hey, see, right now, dear, life is good for you, pal. You have been able to expand your business, which means more money for you. Hey, madam, no.
Oh yeah, it's not been easy, but with hard work and SME loan support from Bank of Africa, my business and my life is better. Just do as I do and bank with them.
With presence in Ghana and across the continent, Bank of Africa is changing lives of individuals and businesses. We are a strong group of professionals and a partner you can rely on. Bank with us now and feel the difference. Bank of Africa, as strong as a group, as close as a partner.
Good morning, everyone. Thank you once again for joining in our webinar. We are grateful that you could take the time to watch and learn from the insightful discussions that went on. My name is Gustav Yawado, and on behalf of the organizers, the Business and Financial Times, Africa's leading provider of credible business information, we wish to let you know that we are grateful that you could spend your time to join us in this discussion. We want you to know that we are here for you. We're here to help your businesses navigate in these troublesome times. We know that it's difficult out there, but we are here. We stand by you, and we stand with you. Rest assured that whatever you need in terms of letting your brand still go out, despite these times, we are here. We're waiting for you to help. We want you to use the opportunity to make sure that you take the best use of our e-papers, our digital copies. They're circulating everywhere. You need to just find a way to reach us via our emails or calls, and then we'll let the papers come to you at your doorstep, at your emails, and even via WhatsApp. So we want you to know that there are more other series coming up in the series of the Business and Financial Times. So please stay tuned. Go on our social media channels, Facebook, LinkedIn, Twitter. We are there to update you on many more beautiful, amazing, insightful offers that I'll be providing to you. Once again, we want to say, Yadase. Thank you, and we wish you a wonderful rest of the day. Thank you.
Okay, your car dey beep out. Charlie, me if I get some little supporter, like I go sell this one, then top up for a new car.
Oh bro, why don't you do as I do? Bank of Africa, my closest partner, sorted me out with a personal loan, and they can sort you out too, so you can change this your car.
Hey, see, right now, dear, life is good for you, pal. You have been able to expand your business, which means more money for you. Hey, madam, no.
Oh yeah, it's not been easy, but with hard work and SME loan support from Bank of Africa, my business and my life is better. Just do as I do and bank with them.
With presence in Ghana and across the continent, Bank of Africa is changing lives of individuals and businesses. We are a strong group of professionals and a partner you can rely on. Bank with us now and feel the difference. Bank of Africa.